Hey everybody, good morning. Morning. Happy Tuesday. Happy Monday. Yeah, right. Happy Thursday. Welcome everybody. A few people weren't really paying attention yesterday. I was talking about the Tuesday evening live show that we do every week for the last 4 years. The attendance for it has dropped off to dismal levels. It's not about the morning show. It's not about the whole channel. It's just about the Tuesday afternoon show. If it's the request show, the only time I do requests. If there's a better time for people, you can let me know. Leave it in the comments. You can leave it in the chat. If there's I'm considering just moving to a member only stream, or maybe adding a member only stream or something like that. You can let me know what you think. There was a lot of critique about why it's not doing good, but nobody's suggesting when they thought they might want to come see it. So I don't know. Maybe you misunderstood what the problem was, but it's the Tuesday afternoon, 30 minutes of awesome show is the one that the attendance has dropped down, and it's been a bleed off. It's not like, oh, it's summer. It's like 18 months ago. Like, we're talking about a year and a half ago was the peak. Now it's like down a lot. So anyway, it's just, just kind of the way it is. So I don't want to be here live if it doesn't work for you. Like, I'm trying to do this to help you, not to, I don't do it for my own health. So I do welcome feedback on it. If you have a better time, you think during the market, it's probably not going to work. An evening, or possibly, I don't know, about a weekend. I'd have to come back to the studio to, this is not my home where I am right now. This is my office, so I'd have to come over here to do that on the weekend. I mean, it's possible, but one of the evenings after the market closes, possibly during a market hour, but I'd have to fit that in with all the other things, all my other demands. The publisher has ramped up things I do during the day, so there you go. Anyway, just addressing that, just so everybody understands, I'm just talking about the Tuesday evening request show, and it's kind of the way it rolls. So, all right, well, welcome everybody. Morning Monster yet again. So, if you haven't heard yet, good news. Well, the economy's like banging, right? Everything's good. At least that's what everybody keeps telling us. I mean, it's what the mainstream media seems to say. It's what the financial media, it's what the government seems to keep putting out. Everything's great, right? But here's a little fun fact for you. Large U.S. companies, most of them public, even public companies, are going bankrupt at the fastest pace since the 2008 financial crisis. Remember 2008? That was a fun year. I mean, we saw Lehman Brothers, Bear Stearns. Yeah, good times. Watch the portfolio go down the tubes. So, yeah. Now, it's kind of like watching a slow motion car crash, except instead of looking away, we're all leaning in, popcorn in hand, wondering what's going to get hit next, right? The best part for savvy investors, car crashes in the market can be a gold mine of opportunity. So let me tell you a story. Once upon a time, in a land of cheap money and endless credit, companies partied like it was 1999. They borrowed, they expanded, they bought back their own stock. It was a wild ride. But now, the music stopped. The interest rate punch bowl has been taken away. The inflation hangover kicking in. And all those companies that were dancing on the tables, they're starting to fall off one by one, missing the musical chairs. We're not talking about small mom and pop shops here. We're talking about big names, companies that you've known your whole life. And while mainstream media is wringing its hands, crying about the death of retail, we're asking a different question. How can we make money off of this, right? That's what we're here for. Now, enter the vulture capitalists, the ones that come in, scoop it up, and carve out all the possible profits. They sound scary, right? But I guess venture capitalist, vulture capitalists is what I think they are. Pick the pieces off the bones, like something out of a comic book. But these aren't just investors who specialize in buying debt out of the struggling companies. They swoop in, buy up the company's IOUs for pennies on the dollar. Then when the company either restructures or gets sold off by the parts, they get paid out. It's like buying a lottery ticket, but with much better odds if you know how to play it. Now, isn't this kind of unethical? I have to say, it is. I mean, kind of, but is it unethical for a lion to eat a gazelle? Beautiful creature, but it's kind of the circle of life, my friends. The weak get eaten, the strong survive, the smart get rich. So, where are the gazelles? Well, right now, they're grazing in a few key sectors. Consumer goods is number one. All those stores. Think about it. Like, anybody been to a mall lately? How about back in the 90s? They were filled with tons of little shops. Names, well, those names that used to be popular, they're in trouble now. And real estate is another sector. With interest rates this high, a lot of developers are starting to feel the squeeze, especially in commercial real estate, just hitting the highest default rate since 2008. And healthcare, well, let's just say that even in a recession, people get sick, but companies providing the care, they're having a hard time paying their bills right now. Look, I'm not telling you to go out and bet your life savings on the next bankruptcy company or company likely to go bankrupt. But I am telling you that in times of chaos, there's opportunities if you know where to find them. While everybody else is panicking, savvy investors looking for the angles. They're looking for distressed debt. They're looking for undervalued assets. The companies that are down but might have a fighting chance. So here's to the bankruptcy bonanza. Maybe long, maybe messy, maybe profitable for those of us who find the right stuff. Stay safe out there. There's money to be made either way. So, we're seeing stores like Forever 21, Claire's, Bed Bath & Beyond. These things are going away. Joann's going away this year. There's a lot of stuff. Party City's gone. A lot of things I've been at, I've shopped at in years gone by. And feels like a lot of them made missteps, right? Like, you used to go into places and then not. So where's the opportunity? Even Big Lots, like, years gone by, flushing out. So, opportunity, you have to watch. Some of them might turn it around. Some of them absolute dumpster fires on the way down. So, anyway, how do we make money today? Look at the markets. Try to figure it out. See what we can do, shall we? So, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, and maybe some fun and entertainment. It's not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. It's not me. I don't have a Series 7. I can't trade for you. I don't have any deals where I'm going to trade for you. People keep falling for this crap. People messaging you under the guise of my name, saying they'll trade for you. That's not me. I don't do that. So I don't have any side deals or special offers. I don't have any brokerage deals where, just sign up, throw a little money in, and you'll get rich. Don't have any of that, all right? That's not real. It's too good to be true. Don't fall for it. You see one of those messages. So be careful out there. The account you save may be your own. The money you save might be your own. Probably is your own. Nobody's watching out for you, number one, like you. So we got the jobs report coming up tomorrow. Probably talk about that tomorrow. Probably my main focus. Should be interesting. Last month, the jobs report is what got the BLS head fired. It's kind of the big show right here. Dun, 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 dun. Average hourly earnings, non-farm employment, unemployment rates, right there. kind of the big show this week. Are these numbers going to come in, say, sour enough that we're going to cut rates a quarter point or even a half point like we did last year? It's been a whole year since we cut rates a half point. Doesn't seem like it, but it's been a whole year now. So, I don't know. We'll see what happens tomorrow. Could be some fireworks. I did position myself for a little bit more of a downdraft in the market. Next week, coming up, we got PPI. And this is interesting. Something's up. PPI coming out before CPI. Every time this happens, something fishy goes on in the market. That's a warning sign to me. Every time this happens, the market doesn't react very, very nicely. Sometimes it's a doesn't react very nicely pop. Sometimes it's a doesn't react very nicely drop, more often than not. Something fishy going on right here. PPI does not normally come out before CPI. You're like, oh, it's just the way it works. And then retail sales is not out the next day. Usually it's CPI, PPI, retail sales. Retail sales coming out on Tuesday, right before the Fed decision on Wednesday, the 17th. Something fishy's going on. See what happens on those numbers. That gives me a caution right there. Anyway. Hey, I actually found some more red monsters. I drank one Monday. For anybody paying attention, I drank one Monday on the holiday. Found some red ones. Yeah, it seems like anytime I drink a red monster during the week, we have a big red day. It's a weird coincidence. I'll even try to drink it and not show it on here, and it's still a red day. So I don't have any in the fridge right now, so yeah, be careful out there. It's just a weird coincidence. It's held true for a long time, hasn't it? The curse of the red monster. So looking at the stay away from the red ones. Let's look at the overnight action. S&P did break through the 15-minute last night or yesterday. No red monsters. We need a correction, right? I mean, be healthy. So popped up. This is sloppy action right here. This is probably some sort of big correction higher. Now, the difficult thing here is where is the, which ones are the swings, right? Like which one off those lows? Which one's the swing? So we have this potential to continue the rally right up here at 6,500. I'll probably bail out on my hedge around 64.75 because that starts tipping the odds we're going higher. Maybe I said that wrong. Maybe it's 64.85. Basically coming up through this area right here. We push up through that. Tips the odds we're going up here, not down here. But right now, hanging out the 618. That's an A. That's a B. And a C. Or a 1, a 2, and a 3 if we get the right proportions. Cautious on this. Very, very cautious. Lots of stuff popping out this morning. We get that high. We get that low. We got this retrace at the 618. This potential flush right down there. This one a little more clear. What we're working with here. So we've got first move down potential, retrace, maybe. This is what I saw. Look at XSP, keeping that high intact even. 1, 2. Be very careful here. So this is why I picked what I picked. So I bought a 640, sold a 635, out 8 days from yesterday. So that's 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day. Out here, looking for that to drop down in here. It just looks like, look at that chop. I mean, that's, could we break out? Sure. It's gonna have to push through like 648. Yeah. It looks like we're gonna drop. I'd love to be wrong on this, but just got this feeling. See what happens on the jobs report tomorrow. This thing may hover today. We may just chop in this zone before we drop. Of course, the drop could start. We could push down here, and the jobs report comes out. We pop, and then FOMC comes out. We'll see what happens. See what happens. For those that don't necessarily remember, fly back. So this was coming in. We had this big flush out, started in July last year, popped back up, hit our head, dipped into here, into September. Then we got the rate cut stuff, and it was off the races, right? But it was a choppy, it didn't really get us much of anywhere. We just kind of chopped. We went a little higher, ran out of steam, and then we did the bigger flush out. This support level still in play. Nothing really changing much. In Q, let's see what we did here. So this one hasn't hit. You know, we're lower, high, lower, high. 618. This looks more like a 1-2 than S&P does. This would be the A, the B, and potential C. The A starting over here. So this is the actual move I'm watching. Gotta go higher time frame. This may actually outperform to the downside a little bit. Yep. We might see this pop in here and then get a finality move right down to that 1618. A. Very unclear on the A. 3-wave move, B. And then nice 5-wave move, C. And then we kind of set the all clear to go back to all-time highs. This thing topped back here mid-August, and this rally lackluster. Now you want to know an interesting statistic. 11 companies have been responsible for 59% of all the market cap gains in NASDAQ since 2019. 11 companies. The rest of the companies in here only responsible for 41% of the gains. Kind of crazy. And it's pretty much in line with the S&P too. There's some ungodly trillions of dollars of market cap, like $27 trillion of market cap in this number right here since 2019. So just be careful. Be careful. Russell not providing much clarity. That's not exactly the kind of consolidation I'm looking for before we pop again. You see that kind of price action sort of over here. We drop bigger. You see this candle right here. Looks like that candle right there. A little run up. Looks like that little run up right there. And this little run up right here. This little run up right here. This little pullback. That kind of pullback. We could get one more little run. More little run. And then a bigger drop. Then a bigger drop. Everybody see that? These patterns repeat. So just be careful. You can see that one right there. Another one similar to this. And then we spike down a little bit. So we might get a little spike down in the market. Oil pushing back below. Come on, oil breakdown. Flush it, baby. Flush it. Gold. So far, glad I didn't do the gold rush trade. That went exponential, right? I mean, no two ways about it. Still think that's a B wave top. It did go a little crazy, going higher than the 0 point. It's okay. This might be vicious, and it might not get a lower low. It may stop at a higher low. Maybe a running flat. So be careful. Things are getting a little extra crispy spicy here in the market. This is very overlapping. Not the kind of action we're going to see before we do a bullish move. Do that. We tagged. First move up, retrace. Second move up, we stopped right on it. Even though it went above the 0 point, careful. Careful chasing gold. Bitcoin. As I said, if we pop above, we need to retest. Got the bottom, we got the top. We might come back down to about this 109 level. If we can test it, break back above. That'd be an initial indicator we're getting done with the bottom here. Next little baby move up should put us up here around 118. Then a pullback, then another move, maybe to around 120. Then we'll probably pull back to 115 again. That would be my expectation. Looking at this chart, not diving deep. I'm just kind of like going off of where I think we are. To be something like this. Not predicting time. Don't try to use this to play out, and don't be like, oh man, I'm gonna buy a bunch of calls out here on BitX and go super heavy on BitU and try to play the options for, that fourth week of September. This could take longer than I think it will, and I mean, like it did over here. You could get burnt. So it looks like we're going to do that, then probably retrace again, and then may go for the finality move on Bitcoin. I think we're coming to the end. Time-wise, I mean, how many years have I talked about early October? Early October, early October, early October. How many years? I mean, you guys have been with me. How many years have I talked about this? Probably since close to certainly more than a year. I know I was talking about it back here. $2024. Maybe in 2023 I was even talking about it. That we get the post-halving run. Took a little while to get really going. But here we are. We're coming down. We're staring down the early October. Maybe we push it a little longer, but we're in the danger zone here. We're just in front of it. If we get into it, I don't really expect crypto summer to last past the end of the year. Have your exit plan in place. Be prepared. Plan accordingly. Looking at the Ethereum. 3 waves up. That's not no bueno. I don't like it. That move up, that retrace, we hit a corrective resistance and turn down. I don't like it. I wanted to see it up here. Still need to see it up here. So we get some potential to bust through that resistance. This resistance is tough. And we spiked it. All the bullish stories came out and then rejected hard. And we've been lower highs since. Need to get out of this funky place on Ethereum. I got long exposure. Like, I'm not, like, as long as we're holding in that 4,200 area, as long as we're holding above it, bullish. If we get below it, probably coming down here pretty quickly. NKD pushing back above. I like it. Got to break out though. Now we got to break back through this high that we established a couple weeks ago. If we break through it, global side. Be careful though if we just do a 618 retrace. Back to here and bounce down. Could be a fake out. So be careful. Dollar still doing nothing. Just churning, burning. Apple checking on the Mag 7s. Apple just grinding higher. It's at the top of the uprights. It's going to take a break through this level up here. Gonna have to get above 250 for me to think that we might retest the high at 260. Be like, that's a long time to wait. Yeah, the downside risk here is ginormous for Apple. They got the new phone coming out. Last time we had a new phone coming out was not the most exciting thing for Apple stock. People aren't buying them like they used to. It lasts too long. They started building good phones. Yeah, so be careful. This right here, Amazon. If we can beat that gap, we set up the stage to go to 257, possibly 271. This is the sleeper AI robotics play right here. AWS, stuff like that. Google found some resistance at 230. Imagine that. Might pull back, retest the gap or the breakouts before we can run higher again. Similar to the way Microsoft is done. Coming back, backfilling, retesting. Microsoft might come down to 49. Meta Back. This one is the back test complete. Did we do it? Like that little dip had me concerned that maybe we come on down and retest the roadmap line here. That might be complete. We might be pushing out. So the upside potential 840, downside potential 670. Nvidia doing its back test, filling back in here, retesting that level right there, 165. It's like putting dipping its toe in there, seeing if it's going to hold. If we get some boom action in the market, this should push on out to 212. Ridiculous. $50 upside roughly. If we don't, we may come back and retest the breakouts of these highs all the way across here and the roadmap line. $20 downside. And if we don't hold that, well, bigger correction can take hold on Nvidia. And Tesla, it's just not been doing much. I see rumblings that a new profit sharing reward system for Elon might be in the works, might be proposed. Can they pass it? Is that what we're waiting on for all these things to roll out? I don't know. Kind of broke through the downtrend. Now we've got this little baby channel going here. Could just stay in the channel. And grind. And if we break out, it leaves upside potential. If we break down, it leaves downside potential. So right now, resistance up here around 460. Support down here around 270. That's a big, fat, almost 200-point range. Be careful. Be careful. Netflix. Looks like we're going to spike that 618. And then maybe roll over. Nothing really changed much here. Resistance still 1265. And support still down here around 1100. That's what we got. All right, I go pull gainers and decliners. That's things moving up $2 or more in the pre-markets. Put them on the gainers list. Things moving down $2 or more. Put it on the decliners list. And then we got setups, things that were set up with my signature roadmap line bounce pattern. In case you've not seen it. When price is bullish, we come down, we bounce off the roadmap line. Get a move back up through the 618. That's your entry. And it sets up the target with 75% likely. 75% likely to get to that level right there. And then sometimes you get an explosive move even higher. So these setups right here are things with that setup. Like this one right here, close above, looking for $2. Yeah, $2. I probably wouldn't trade it. Danger, low price stuff. Low price stuff doesn't always follow the pattern. Why put it on the list? Because I'm not picky. You know, there's people that maybe not looking for the biggest stuff. Now, Tuesday, 30 minutes of awesome. We talked about this potential. Here it is, the close above. Here's the entry today officially for the move up to 51, basically. Maybe be conservative and 50.75 be your target. HMY. And it's the firing off alerts like crazy here this morning. Here's the high, here's the low. We got that. That technically yesterday was the close above the 618. Today pulling back just a little bit. The target 1680 in here. Statistics not really very meaningful for any of this. I just made a trade. I just traded something. It says TSLL. I did something with TSLL. This one was in it from back here. So, but we set up another high, low, another bounce. My Apollo algorithm will only take one at a time. But this is another potential entry. Looking for $4 on the upside. Low price stuff. Caution. IMCR. grab the tool. There's the high. There's the low. I think that was it. Zoom her up a little bit. Yeah, that was a low. Here's the entry, 39.91. Statistic, like, here's some of the worst statistics on here today. Even FCX doesn't have very good statistics. PKST. Let's go with the high. I feel kind of mellow today. I don't know if everybody getting that vibe from me. I'm just kind of mellow on the market today. $14.84 potential upside right there. This one in it from back here on that pullback. Went a little bit lower. Setting up the 41.18. If we do that, it'll probably run on up to, probably might run on up to 42.86 right there. This one does have, it's just a normal type of trade right there, but that looks like we're going to get some targets on VNO. So out of all of them, VNO probably the best one out of the bunch that's set up today. If you want access to this list every day when it comes out at 5 p.m. in the evening, you got to be a Termite Trading Lab member. Links in the description down below. You fill out the form, see if it's right for you. So checking out some of this other stuff. Snow, get a pullback, get whacked. So it looks like we had a high and a low. We hit the target. That was a bounce right there. Gave you no entry. It just popped up to the target. Sometimes they do that. We don't get an entry opportunity. It just runs up the target, and then we come back. I have one share of Snow. I bought back here when it dipped down to 100. When it made that lower low, I went and bought down here. I bought some options, liquidated them out. Bought options here. Bought calls right here. Bought calls. Sat through that. Booked them out up here. Now I'm waiting for the next opportunity. And we'll see. We know that the Q3 delivery number is probably going to be bad too, even with the expiring credit and all the push forward. And then Q4 is going to suffer. And Elon already said that likely several bad quarters after the expiry of the tax credit motivation thing for people to buy those EVs, so BEVs. So we'll see what happens. Molina Healthcare, maybe making a bottom. Let's see, UNH, how we doing over here? Still haven't filled out the other shoulder yet. This may fill out a shoulder. If we hold that higher low, then break out. Could be a nice little pop. And Warren Buffett, man. Everybody's on the band train. everybody jumping on the train with him, but it's not going anywhere. Bandwagon. That's the word. Let's see, any other opportunities I see. So I'm trying to figure out how to build a tool. I may just code it up for TradingView at this point. When we're at 52-week highs and we spent a few months consolidating, find these opportunities that do this because they're likely to keep going for 6 to 12 months. That is a beautiful potential. Now, 1, 2, 3, 4, 5, 6, 7 months consolidating probably didn't work. Yeah, 6 months was kind of the limit there. But CRDO, look at that, keep going. Probably going to keep going on that one. App loving probably going to keep going on that one. T-Row, not a 52-week breakout. GPC. And just remember, 52-week breakout is only 12 candles, so we're only looking back 12 candles. NKTR. That is a breakout, but it didn't consolidate for, well, it's not actually breaking out yet. So if this one breaks out, this may be a runner also right here. I don't even think I've ever even heard of that. Brinker International, consolidating still. SCBL, consolidating still. In case you don't know what I'm talking about. So I recently read an article that was talking about how if you take a look at the 52-week highs and you have a stock making a 52-week high, and then it does 3 to 6 months of consolidation before it pops out again. When it does this, usually it will outperform the S&P by 30% on average over the next 6 to 12 months. So maybe only 6, maybe 12, but you have, 6 is the common denominator here. So you get at least 6 months, maybe up to 12 months. So if you go after these breakouts, you're likely to outperform the S&P by 30%. And this has worked for 2 decades. Like this pattern right here has held true for 2 decades. So almost the entire 2020s, or the entire 2000s. So interesting pattern. I just happened across this recently. The data showing how it works over and over. So hunting these down. If we can make a new 52-week high here, but that's not really a long-term trend. It works best on ones that have a long-term trend. Cooking like this. See this trend? That's what I would call a long-term trend. Several years, pulled back, breaking out. Likely to get continuation if we do. Right there. Now, you may be like, well, how do I find 52-week highs? Like to be able to check this out. So check this out right here. Stock Chameleon, Market Chameleon, marketchameleon.com. You just pop on here, go to stocks, come down here. They have a button for 52-week highs. Under stocks. Right there, 52-week highs and lows. Click on that baby. And cool. I don't want to log in. Now, you pull this up, and we're looking at the 52-week high list. 67 new ones today. Now, to help you kind of figure it out, which ones are the interesting ones to look at, we want to kind of start looking at average daily volume, average option volume. These ones with big bunches of volume on options are going to be ones we can play options on. If they got no options volume, maybe we shouldn't look at them because it's going to be difficult to play options on. So handy dandy right here. Barrick Mining, ANET, UEC, WDC, Corning, GLW, CRDO, KGC. So these right here. Now be careful once we dip below 10,000 options a day. And this list will change every day, but Light has been on here quite a bit, hanging around the 52-week high. SanDisk, we already pulled that one up. Doesn't have much history. But you gotta, when you gotta take this list and then pop over and start looking at them. There's Barrick. It's kind of at a target though, so I would be careful. Might continue, but it might pull back before we can get continuation. Remember, we're not looking back years. We're just looking at 52 weeks. So we're just looking for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles. We're at 52-week high. Now, it is smart to look back, though, and see where we've been topping before. Top right there. might provide resistance. So if you're banking on this going through, might be smart to consider where prior resistance is. Ain't it? See, that one has that pattern. Long-term uptrend, little pullback, breaking out again. This one might outperform for the next 6 months. We're only on month number 2, so we have like 5 months left, including this one. UEC. Yeah, a little bit more choppy on the pattern, but there's the breakout. Might get 6 months. You can see it over here too. Like we kind of broke out of that. I don't know where the 12-month was. That was probably longer consolidation than 3 to 6 months. Yeah, that was definitely longer than 6 months. But look at that sucker go. That's on month number 4. That's month number 1, month number 2, month number 3, month number 4, 5, 6. Could get 2 more months. Could get, could keep going for a year, but on average, at least 2 more months right there. You may find a value in this right here. GLW. That consolidated for a long time, but now on the rip. We're on month number 3. Could have 3 more months to go. It's the RDO. And there's another one. So we spent 1, 2, 3, 4 months consolidating. 5th month we broke out. We're on month number 2, 3, 4. Could have a couple more months to go on CRDO. Doesn't have a long history, but that is an uptrend. And we're just staying on the monthly chart. We're not even paying attention. So daily stuff, weekly stuff, we could pull back, but we're focusing on the big time frame, going higher. And KGC, and that one, no pullback. So this one could be nearing the end here. I mean, we had a little 1, 2, 3. And then we're on, that one was red, but still 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Could have 4 months left, but it's already past the 6-month outperformance. So watch out. That one could go back into a consolidation. EWC. Yeah, that one. And maybe. We had 1, 2, 3, 4, 5. Yeah, that did break out. Then we're on, that's month 1, month 2, month 3, month 4, month 5. So that one may be nearing the end. I would be careful there. And STX is another one. And same pattern. Getting to the target on that one. CDE. So maybe today is not the best day to find opportunity in this pattern. So I'm looking at building a tool that helps find this stuff. So there we go. I'm gonna wrap it up here, everybody. I don't have a show today. I'll be back tomorrow morning. Same bat time, same bat channel, 9:15 tomorrow. Make sure you subscribe for another Morning Monster. I'll be in Discord hanging out. I got meetings today, plans for the I guess we're gonna build our plan for the credit spread thing I teased yesterday. Potential 90% win rate or 89% win rate on that. So we'll see what happens. Have a great day. See you again tomorrow.